Welcome. We are back. Okay day for the market. A little bit back and forth. Tomorrow we have FOMC meeting minutes at 2 p.m. and then the markets close on Thursday for Thanksgiving. So you could have a pretty volatile day tomorrow with that happening in the afternoon and then only a half day pretty much on Friday. So we're heading into that. And let's talk about crypto first. I'm going to talk about other markets. Just a quick update on the stock market tonight. Nothing crazy. Just some simple updates, making sure everybody's aware of what's happening on the charts. And yeah, let's get started with Bitcoin. It's starting to look better to me. It really is. You're starting to get that classic bullish divergence. You see it on the RSI, a little bit of a bounce today off the same lows you put in on November 9th. If we go over to the 4 hour, I kind of redrew this pattern. It is a descending triangle, which is bearish, but it could still break up. You never know. Right now, it's very simple. You have some classic bullish divergence on the 4 hour and the daily. The question is, can you get above this supply line and break out before falling under 15.5K again? And the 1 hour chart, this little resistance is being put in around 16.3K. You kind of have like a mini inverse head and shoulders developing there as well. So I think short term, there are some variables for a bounce. We'll see if those play out in the next few days. And then Ethereum did just pretty much print two bullish hammers. They're not perfect. Typically, you want like a smaller body on them. But regardless, this is like the fourth time you've had pretty decent wicks off of around 1070. And you're getting that short-term bounce. If we go over to the 4 hour, you can see pretty much the same pattern that I charted out on Bitcoin on Ethereum as well. So that is there. Moving on to other markets, the US 10-year. We talked about how it looked like a little bit of a bear flag last night on stream, and it seems like that is kind of playing out. You're breaking down a little bit more, so good. It's kind of like a head and shoulders. I mean, double top, head and shoulders, whatever you want to call it, starting to form. And I do think finally the technicals are flipping back towards the bearish side. Really, they've been doing that since you broke the trend line, but now it's really playing out because you broke it and you still went up for a little bit, like a week or two. So pulling back now, there is support down around 3.5%. That's kind of the next level I'm going to be looking at. And then crude oil did get a small move higher after the bullish pin bar we talked about yesterday. Apart from that, nothing really has changed. You're just testing this 8150 level, which was lows from September 8th and October 18th. Moving on to metals, gold is just kind of staying calm. Silver doing the same thing. A little bit of fall through price action after the bullish pin bar yesterday. The dollar currency index pulled back a little bit today. This is also very similar to the US 10-year, and it maybe could be good for equities, but we'll see. It's kind of like showing us that trend, potentially trend changing formation, like that head and shoulders structure. It's nothing beautiful or perfect or pretty, but it's just kind of there. And even more short term, apart from that, like overall potential trend reversal pattern on the 4 hour, you have as well kind of a bear flag forming here too. Maybe it's even breaking down already. So that's really what's going on in other markets. The Hang Seng Index is starting to pull back. It did fill this gap from November 14th after rejecting this resistance around 18.3K. And that's pretty much it for other markets. Before we even talk about stocks, I want to start off with the VIX. And you did see another day lower, but on the daily, you pretty much filled this gap from August 22nd. That's the only unfilled gap really in the short term that I can see. And you did fill that gap today. So it's been a long ride down pretty much for about a month and 10 days. And now you finally have filled this gap. This is really where like the market started falling back in September. And then we had this rally throughout October and the first half of this month. And now we're kind of back down to where we were. So if we go over to the 4 hour chart, you're very close to what I've been talking about for a couple weeks now, this bullish bat. You're very close to the pattern completion zone and filling the 4 hour gap. Almost oversold. I think this is indicating a VIX bounce soon, and that lines up with minutes tomorrow, so that can obviously affect things in either direction. But if we don't get a good reaction to minutes, that could be the type of catalyst where right at the PCZ we start to get a reaction move, which in turn would most likely send the market down. So this is the main thing I'm watching right now to see if we get a reaction within the next, well, really this week we have tomorrow and then the half day on Friday. Within that 1.5 days, we might start to see the VIX bounce for the first time really in about a month and a half. And that's concerning for the market, especially because this is all happening right when the S&P 500 is potentially, you see the title of the stream, in the last leg of this bear market rally. It's approaching a lot of resistance. If you watched last night's stream, exactly what I talked about happened. I said we're in this market distribution, but we do have a bull flag, not only on the SPY, but on a lot of 1 hour charts. There's just a lot of these bull flags. I said it looked like it was going to break up. They did break up today. So you're seeing the move off the bull flag breakout, but you haven't gotten above your highs from about a week ago yet. You're still under that. You're still technically in market distribution. This whole entire area over here could be considered market distribution. Even if you break this to the upside, again, there's just a ton of resistance above you. So I am thinking that the short-term top for this market takes place somewhere over here, all right? Somewhere in this little green box I just drew. It's a lot of resistance lining up at the same time while the VIX is filling the gap and showing a bullish bat. We've already been rallying really since the year low. Again, about a month and 10 days ago. It's been a pretty solid rally. Off the lows, we're up about 15% in a month and a half. That's a pretty good move. We've seen that type of move before already this year. It's a standard bear market rally for right now. You're losing volume, your Bollinger Bands, you're getting closer again. If you go a little bit higher, that's your upper Bollinger Band waiting for you right at the 200-day moving average. It really is all lining up, in my opinion, for a short-term top. So I'm warning about this right now. There's no certainty that will happen. The one thing that could change things is if we do get all the way up to like 407, 408, you have a partial decline, which typically would mean you have a 70% chance of breaking out of this descending broadening wedge. But again, a lot of resistance, and you've already been rallying so much. I don't know if I'd say we have a 75%, 76% chance of breaking out if we test it. I look at it as more of a 50-50 if we do get up there. But you're already seeing a little bit of resistance being tested right now. You're at 400, which is a mini resistance level. So we'll see how we react to this level first on the SPY. Let's move over to the Qs now, which looks a little bit better. It's not like it's at a ton of resistance. I think the bigger resistance for the Qs is like up over here. And you are successfully flipping your resistance from the beginning and the end of October into support. You've held that for 3-4 days now. Now you're moving back off of it. Again, it just kind of looks like this little flag structure, back testing your previous resistance. This looks pretty good. A lot better than the SPY, in my opinion, because it doesn't have all that resistance right above it. But if you can hold that, maybe like 294 is your next resistance. You can see a lot of these highs from back over here. This low, this high, this most recent high around 294, I think is that next level. If you can hold these lows around 280-ish. So Qs look a little bit better. Maybe if you do rally some more, the classic bearish divergence starts to play out, then you start losing even more volume, because you still are losing volume on the Qs as well. This is a major signal that I'm keeping an eye on. You're losing volume the higher we're going. All right, that is something to worry about from a technical standpoint, in my opinion. And then moving on to the Russell 2000, still under the 200-day moving average, still developing hidden bearish divergence, still under 188. So I am bearish on the small caps, or at least a small cap index, under that 188 level. So even if we do get a little bit more of a rally on the Qs and the SPY, and then the VIX hits that BAT PCZ, even if the Russell rallies up a couple more points, it's still under resistance. It could reject that and then go lower. I'm not trying to be like a mega bear right now, but everything I think is lining up towards the same resistance at the same time after a pretty good rally in the last month and a half. So I just think it makes technical sense for us to reject these areas for the next couple of weeks at least, and then maybe we get a rally on later in the year, but we'll see. And then we have the ARK ETF. You really zoom in, it did print a bullish hammer candle today. It's still holding support, but it's just being really weird. I'm actually going to delete this wedge at this point. It's just not really helped much. So if you can continue to hold these lows, fine. It's just not really done a great job of that. I have this 4-hour bear flag / ascending broadening wedge as well. But you've been holding it. You've been holding the demand line. This is like the 4th time you're getting at least a small bounce off of that. So it's a little bit confusing. It's not like a huge deal. But again, the main worry right now, in my opinion, is this monster bullish bat on the VIX taking place during a bear market. This is a type of pattern that can seriously continue the bear market. So still keeping an eye on that. But that's really it. Just a little quick update. We did get that short-term move off the 1-hour wedge. There are a lot of other charts with 1-hour wedges as well. Maybe they have a little bit more steam left in them here. We can take a look at Apple. Something like this over here. If we take a look at Amazon, it already broke out. Tesla, it's testing a breakout. Microsoft already broke out. Google, testing a breakout. So you're getting these 1-hour wedges. They're not bad. They look okay. But I just don't know how much they can play out with all that resistance above you on the SPY. We will see. Let's talk about Fisker really quickly now, which did underperform pretty roughly today. It also is kind of creating a 4-hour wedge, but again, if you watched last night's stream, I talked about how you've made 2 higher lows. Really, any low that's higher than those previous lows, and then you eventually get back above 8 would be a good thing in my opinion. So even though you're underperforming short term, I'm not too worried about it. I think they rang the bell today. This is the first time they did it was like virtually because of COVID, but I think they did it in person now, which was cool. But yeah, you're still under $8. That's the bigger level. So hopefully you can just make some sort of a higher low and then get back above that $8 level. That is the main thing I will be looking for in the next couple of weeks, even if the market does pull back. And then also AMC, I've been talking about this flag. It's still developing, still keeping an eye on it. I feel a little bit repetitive with this, but the same thing really is happening day after day. So those are some other stocks. Also, Manchester United today had a mutual agreement of sorts to end the contract with Ronaldo. The club thanks him for his immense contribution across 2 spells at Old Trafford, scoring 145 goals, whatever. There's already been a lot of drama going on for a while, and with this news, you saw a 15% green day. And if you take a look at the chart, it's pretty much a massive inverse head and shoulders that's been developing since the beginning of this year. And you're testing a breakout of this inverse head and shoulders. So if it does break out, you've got resistance at $17 after that, and then you have a resistance zone around $20 pretty much over here. So this is a very big pattern. I'm keeping a close eye on it. I did not even know that this was listed on the New York Stock Exchange until today. And you can see the volume is pretty insane as well with that news. So we'll see. Zeke in the chat is saying Manchester United owners could be stepping down too, which could have added to the catalyst. Not confirmed though. So yeah, we'll see. But there's just like a pattern I saw that I wanted to mention. I thought it was pretty cool that it's developing right now. And then moving into large caps, let's start off with AMD, which is holding back above $73, which is pretty big. You can see it was this low from May of 2021 and this low from July of this year. So it's getting back above that important level. I mean, look at how many lows you've had here. You pretty much broke above it, back tested it, and now you're rallying back above it. And if we go over to the weekly now on AMD, this is where things get pretty interesting. You've got classic bullish divergence. You're testing a weekly breakout of this wedge, and maybe even a little bit of a harmonic here as well. Let's see. It's pretty much a bullish bat at the same time. So on the weekly, AMD has a bullish bat testing a wedge breakout in classic bullish divergence. Also getting back above, at least for right now, this very important support level. So haven't put out a public swing in a little bit, but this might be the first one I do if we get a little bit more confirmation. So I'm keeping a very close eye on AMD right now. Just wanted to mention that. Very nice 4% day today. Moving on to Disney, which had a pretty good day yesterday, gapped up. Kind of pulled back a little bit today. It's a very choppy chart right now. I think getting back above 100 would be very big for Disney, because then if you were to zoom out, it's like one big dragon pattern. Like that's your supply line, and then you have this first low from the summer, and then a low from this fall if you can hold above $91. Keeping an eye on that as well. Meta bounced up a little bit today. It is looking like a flag, like a lot of other charts as well. It already kind of broke out of this bull flag. Apple. I alerted some Apple puts today. Let's go down to the 5-minute. I alerted some Apple puts right over here to premium members as like a day trade. They went up about 15%. I was hoping for a little bit more, and they ended up going back up, and I just marked them a break even. But just speaking about Apple in general, it's getting very close to this gap fill around 151, and 151 is pretty much right here. It lines up with a lot of different highs and lows from the past, so it's a key level to watch. If it can get above that and hold it, then you have this potential inverse head and shoulders breakout. So this is something maybe that helps the SPY get up to that supply line and 200-day moving average resistance if Apple can break out. But again, even if it does, you've still got more resistance above you. So that's the issue with a lot of large caps right now. They're doing an okay job of continuing to rally, but they're losing volume and they're heading up into resistance. That's not a great combination. And then Amazon still hasn't filled that gap, which was a little bit lower. It was able to break out of this wedge today. I'm just kind of worried about a lot of these wedges maybe turning into bear flags, and especially if the VIX drops down to that BAT PCZ, we could see that play out. Tesla bouncing up a little bit today. First green candle in a while, actually. You've got a little bit of classic bullish divergence potentially, and again, heading into tomorrow, we'll be testing a 1 hour wedge breakout. So not too bad. And then Microsoft as well. I've been talking about this one for a couple weeks. You've got the double bottom, the lower low double bottom, the wedge breakout, the back test. Getting above this blue zone could maybe set up a move to around 267, which is your 200-day moving average, and a little bit of resistance from the past few months. So I'm keeping an eye to see if Microsoft can get above this right over here, because the last 2 times in October it tested this level, it wasn't able to get above it. It also had earnings and then sold off a little bit more, but right now, after breaking out of this wedge, it's testing that same level again, so it is something to keep an eye on. Google is still in this descending broadening wedge. It has that gap fill around $89, which I'm keeping an eye out for in case it rejects all of this, because you're testing a supply line. You have hidden bearish divergence and this resistance zone on top of you without a partial decline. You don't really have a partial decline in this descending broadening wedge, so there's no 76% or whatever chance of a breakout on this test. You've actually rejected it for about 4 or 5 days in a row. So we'll see what happens there. Coinbase is also testing all-time lows. You can see this low from May 12th. It's retesting that. It's held it for like 2 days. On the 4 hour, you might have a little bit of a wedge forming here. So this is like a low risk, potential high reward area for Coinbase, because setting up a swing here, that's not financial advice, and I'm probably not going to let her swing on this. But you can see just putting a stop under those lows, you know, it's 9% risk, whatever. But setting it up to like the next resistance, that's already like a 3-4 reward to risk. So just for something to keep on your watch list to see if it can hold these levels. With that, again, that 4 hour classic bullish divergence and the wedge. You've even got classic bullish divergence on the RSI. It's not bad. You have some variables and you're testing like your final support. So if there's anywhere where maybe it finds a little bit of a floor, it could be here. And I didn't talk about CLOV, so we'll do that right now. Not much is really different. It's retesting its all-time lows on the 4 hour. You know, you could argue that it broke out of this channel and now it's back testing. You have a little bit of 4 hour classic bullish divergence. I'm just going to extend that supply line because CLOV has been difficult regardless, so I'm not going to try and look at potentially false breakouts. We're going to be conservative with it. But very similar, we just talked about Coinbase, which has like a 4 hour wedge with classic bullish divergence. CLOV kind of has the same thing. And if it can hold 121, that would be optimal, to say the least. All right. So those are just some names off my watch list. Currently, futures are relatively flat. NASDAQ futures are down a little bit. And that's it. Just a very quick update stream on what's going on in the market. I just wanted to give a few of those updates. Nothing really is too crazy right now. And that's really it. If anybody has any ticker requests, feel free to drop them in the chat right now. And check out the links in the description, the Discord link, the free course. I'm thinking about doing a Black Friday sale for premium, probably starting tomorrow. So I would say don't sign up for premium if you were planning on doing that today. Look out for that sale tomorrow. It'll probably last a few days. And I'm going to try and make it a good one. All right. And I probably will be live tomorrow night around the same time. And that'll be the final stream of the week. And Zeke is asking if NVIDIA is similar to AMD. We can take a look at that. Let's go over to the weekly. It kind of has already started to play a little bit quicker. I would say it's kind of testing a wedge at the same time, but the classic bullish divergence is already confirmed. And if it can't get above these highs over here at 193 during this rally, you risk that flipping into hidden bearish divergence. It's not too different, but I would prefer the AMD chart a little bit more on the weekly, at least for right now. And then Upstart. Let's go over to the daily. It's in this wedge. It's kind of retesting the demand line. Let's see if it filled the gap. Still has the gap to fill around 1750, so maybe you might want to do that before breaking out. That's really it. That's like that abandoned baby candle over here, just by itself. That's really all you've got if you break down from this wedge. And then, no, I did not talk about XLE earlier, so we can look at it right now. It's just kind of doing the same thing. This whole entire area is really confusing to me, because one day it's breaking out, one day it's breaking down. I'm just waiting to see which way it kind of breaks out of this overall range that I just drew, this huge green range. Very similar to how I was talking about market distribution. This is kind of in its own distribution as well. Just confusion. And then GameStop still in the range. Yeah, until this really starts confirming candles above 28 or below 24, it's just a 50-50 to me short term. But when it does do that, this is a very long consolidation range. It could make a monster move in whichever direction it breaks. All right. And then ticker change, I'm not sure what that is. Is that like is ASAP the ticker or no? I think it might be this one, so we can look at this. Yeah, not much I can do with technicals on this chart, but it looks like there was a split or whatever. Huge move. What's up, Levi, in the chat? And yeah, we haven't looked at CLF in some time. We'll take a look at that. Interesting, it's breaking out of this wedge. It's not a textbook inverse head and shoulders, but it's kind of got that look to it, like this. And you have like your neckline around like $15 to $16. See what happens. I think breaking above 16 in general would be an important breakout. You've got a gap fill around $18 if you can do that. Lines up with some resistance from February of last year. And then after that, honestly, there's a lot of choppiness between 18 and 20. So that would probably be the main zone to keep an eye on. RB, we just looked at GameStop. It's literally just in a range for right now. So we're waiting to see which way it breaks out. So, yep, quick update stream for tonight. I'll do another one tomorrow night, most likely. We might have a crazy move with having Thanksgiving and then also FOMC minutes tomorrow and the VIX approaching. This is the main point that I want to get across on the stream tonight. The VIX approaching the pattern completion zone of this bullish back that's been forming for 3 months. Yeah, for 3 months this has been forming. And you have that unfilled gap that's about 2.5 months long. You're finally completing it. This is something to keep an eye on. See what happens. And that's going to do it for tonight. Thank you for watching the stream. Also, keep an eye to see if Bitcoin can break out of this little triangle or not. That's something that might happen or not soon. And yeah, hit the like button, hit the subscribe button, check out the links in the description. Look out for that premium Black Friday sale to start tomorrow. And have a good night. Peace out.
Get into the front seat, George. Stop the car, you fool. It's finished. The rest is easy.